Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, the U.S. dollar taking off?
Yeah, the U.S. dollar, this year it's kind of put in a pretty major double bottom pattern. And in the last 3 weeks, it has been threatening to break out above 95. And it is really only, I think, days away from a very big breakout. We could see a run in that index from pretty much 95 to 98 or 99 on the index, which is a huge move for the U.S. dollar. And if that happens, we're probably going to see a pretty big shift in commodity pricing. It's going to put pressure on commodities across the board, but mostly precious metals. And metals are hanging on by a thread. They're trading at resistance. They're in a downtrend. So if the dollar pops and rallies, don't be surprised if gold and silver go into a multi-week correction, potentially a 4 to 6 week pullback.
Is this connected to a truce or whatever in the U.S. debt limit battle in the U.S. legislature?
Oh, I'm not sure. I don't know what's going on with that, but obviously when there's fear in the market and in the globe, we tend to see the U.S. dollar move up, and so the whole debt ceiling and debt issue. I think it's just starting to create that fear, and people have been liquidating positions. We've been seeing the stock market pull back. We've been seeing metals pull back. Really, a lot of things have been just selling off, and the dollar has been going up for 6 weeks straight pretty much. And so that's people liquidating and just moving to the currency they're comfortable with. And people always seem to have trust in the U.S. dollar. And so it tends to be the one that money goes to, and it rises when there's fear. And so the rising dollar is telling me there's global fear going on, and the debt ceiling issues definitely, I think, are a big part of it.
The Canadian dollar has also been doing well. Is that because we're seeing high natural gas and crude oil prices?
Yeah, for sure. The loonie moves a lot with crude oil. When we have a big update in crude, we see the Canadian dollar move up as well, and vice versa. So it's been trying to put in a bottoming formation. It's actually very close to having a big rally itself. Overall, crude oil is in a very strong uptrend. I think it could continue. And that'll probably keep the Canadian dollar holding up and moving higher against a lot of other currencies. You look at the euro, you look at the Japanese yen. A bunch of these have been moving sharply lower, and a lot of them have bearish patterns. Really, the dollar and the loonie are the two strongest looking sectors, and they look like they have a lot more upside ahead of them, while the rest are kind of about to start a free fall mode.
Well, Europe, Asia, China, Japan, they all have an energy crisis going on where their natural gas prices have absolutely ballooned. I think in the Netherlands, they saw their natural gas go from $5 to $39.
Yeah, I heard it move like 60% in one day or something like that last week. It's wild. This is, over there they're going to have like the tulip spike with natural gas. It's just pretty crazy when you see this. Now, it's kind of the perfect storm for natural gas right now, because when you look at like the weekly chart and you zoom out many years, every 3 or 4 years we have a major cycle low followed by one of these big, huge rallies, these blow-off moves in natural gas. So we're not only is there a crisis, but it's happening right when a cycle high should be happening in natural gas. So that's why I think there's just extra energy behind it, pardon the pun, is we've got a cycle moving up, a multi-year cycle, plus we've got the crisis, and it's just getting a lot of media attention. So people are really piling into the energy sector stocks, and really helping drive it even further to the upside.
Now, in North America, we don't have a shortage of natural gas. BC has a 200-year proven supply. Alberta probably more than that. So, but one of the problems is Quebec is against pipelines. They want to use Middle East oil and gas instead of Canadian. Is that a problem for investors here that, for some reason, Quebec hates the West?
Yeah, I don't get the politics between all the pipeline stuff. I mean, in Canada, we don't have refineries for gas. We buy, American gas and everything just seems so backwards. I try not to think about it too hard. I don't know how it's affecting things, cause that's just not the area I focus on. But, obviously the politics and people, turning down pipelines and wanting to do things different ways is going to definitely drive the commodities up and down as there's talks about it and then deals are canceled. But, if we have to keep, buying everything from the States, it's gonna definitely help keep the pricing up, in the States.
Now, China's invented a way to ship natural gas in, shipping containers, small thermos bottles to keep it chilled for the trip across the ocean. Could you see natural gas being shipped by rail in Canada and the U.S. if people don't want to build pipelines?
I think so. I don't know where the liquefied natural gas, how big that is becoming, but I think we're definitely going to start seeing it. It's a catch-22 because now that the price of it is spiking, people will probably want to steer away from it or try and cut down on use. But obviously, however, if it needs to get moved in large quantities, train, tankers is definitely a way to do it, so.
Well, especially when you tell people, well, they're going, it's a fossil fuel, it's evil. Well, compare the pollution from natural gas to what you get from diesel or coal. Much cleaner. Yeah. And I can tell you back in the 80s in Vancouver, the smog here was horrible. You couldn't see across the street. Very rarely do we have bad visibility days, and usually that's from a forest fire, not because people have converted to natural gas.
Yeah. No, it's a pretty clean fossil fuel. It's tough to beat.
Plus, it's very efficient, and I know cooks prefer it. In Vancouver wants to ban natural gas unless it comes from a landfill. The city of Vancouver itself, the rest of the Lower Mainland hasn't become that radical, but I know chefs prefer it. It's a nice warm heat, and it's clean, it's fast, and they're saying if they have to use electric stoves, it's going to change the taste of the food and perhaps hurt their clientele, and they won't have as many customers. So there's more to that. There's taste to it rather than just heat.
Right, yeah.
We'll have more with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on in the equities market?
Yeah, the equities market, it's a pretty interesting scenario. We're still in a full-blown bull market, but we have seen a lot of selling over the past month and a half, a lot of high volume to the downside. So there's definitely people selling shares, and that's why the price has been moving down. But we are here at a pretty critical junction in the stock market. We're actually at a really major cycle low, very similar to the March low in terms of COVID of last year. We're similar to the September-October low of last year as well, and we're back down at another one of these major cycle lows, and the market is very close. I think we're only a week or so away from potentially seeing this market take off and start another big run. And the cycles that I have are pointing to a rally that's going to take us right into January 26th, and that could be a pretty amazing end-of-year rally. We're going to probably see some very big sector runs. We're going to see some big index runs. I think we're going to see the Russell 2000 have some pretty big moves. But it's still a little early. We are still in a downtrend, and it hasn't confirmed and given us this new buy signal yet. So we are just kind of standing on the sidelines, just waiting for the stars to align from a technical standpoint. We want to see various sectors and assets start to underperform or outperform each other in terms of what they're doing. Risk on, risk off is how we look at that. And there's a lot of excitement as we go into this end of year push. And the big question is, can this market pop and put in a bottom? It's going to be pretty good. But if it does break down, when a cycle breaks, they get pretty ugly. We can go into a deep correction. So we are sitting in cash waiting to see which way this market's going to go over the next week or two. And from there, we're going to have some pretty big explosive moves in the equities market. So anyone kind of heavy in equities should be very alert and ready that things could get ugly very quickly. They could also get very good as well. You just need to be sure you're managing positions, because if things turn south and start to drop, the bottom is going to drop out very quickly.
What's going on in the crypto scene?
Yeah, we've seen Bitcoin have a beautiful run. I think you and I had talked about it a few weeks ago, that there was a measured move on Bitcoin looking like it should run somewhere into the $55,000 mark using technical analysis, using a Fibonacci extension. And what that's doing is it's measuring the run that it put in, the low from July up into more or less September, the high in September. And then it measures from the low that it put in September. And that projects forward where the next two resistance levels are for Bitcoin. And one of them is $54,000 to $55,000, which we just hit in the past couple of trading days. It's been kind of pausing and trading there. And that is a really good sign. When price hits a 61% extension, which it just did, and pauses, we almost always see that 100% measured move get hit afterwards. So the next upside target for Bitcoin is 64,000. That'll put in pretty much a double top or test the highs that we saw earlier this year. And from there, we'll just have to see where it goes. But it's still pointing to higher prices over the next month or two. And I'd be looking to hit that $64,000 mark here anytime.
Chris, we'll get to see your smiling face on television quite often. You have a new gig coming up.
Yeah, so I'm going to be on a new CNBC show that I can't really give out the details yet, but pretty exciting that be on there as a contributor, a regular contributor for live kind of market analysis as we're going. So, yeah, it'd be pretty exciting.
Well, Chris, it's all the practice you got here that's going to make you a TV star. We'll be proud to have been part of it.
Yeah, well, thank you very much for having me on this show. It's great. I love it.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@housestreet.com. Find us on YouTube at Talk Digital Network. We're on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.